afternoon, everybody. Welcome to the Trader Merlin Show for your Thursday afternoon edition. I guess there's something with the algorithm today which changed at YouTube because I see you guys all have crowns now. Well, actually, it's interesting because what it does is I believe it's giving you a crown based off of how active you are in the chat. So now I'll know who's the chatty one in the comments as we go here today. So that's a new one. I didn't have to turn anything on. It's just brand new as of today, so that should be kind of fun. The level of importance, yeah. The best trader you are, that's pretty good. That's right. You are the important followers. Well, you know, it's the ones that interact, I guess, is what YouTube wants. They're trying to, it's probably the YouTube algorithm trying to make it more appealing for you to, you know, compete and comment more. So we'll see how it goes. There we go. All right. So I had a tough time naming this show today because I know that some people might take offense to the term bipolar here because obviously it's a medical condition and it could be a touchy subject. But I did it in the sense of how these markets seem to operate. Going into the open today, everything seemed totally fine. Markets were doing pretty good. It was great. I mean, I was really expecting us to have a ripper of a day. And then all of a sudden, a court comes out and says, hey, you know what, the trade court over there that shot down the tariffs and said you can't do it, no, we think that's not true, and overturned it. So the appeals court did. So you kind of just hold your head in your hand and go, oh my goodness, this is just absolutely crazy bipolar stuff. Now, it did create a very interesting setup from a technical perspective. So I'm going to do things backwards here today. I'm going to start just with our top 8, and then I'll go into a couple questions. I also got some clarity on 24-hour trading that we talked about yesterday. Very interesting. Really interesting about the 24-hour trading over there at Robinhood, etc. Begging for spam. Yeah, I guess it is. I guess it is begging for people to spam. NVIDIA, that was a spot-on one today, right? That was pretty crazy. But let's start with our top 8 here. I'm just going to run through them. There's not a lot of updates here. Nothing that's really that noteworthy except the end of the day candle for the indexes. Look at crude oil, down 1.5%, no big deal. There is some stuff going on with OPEC, etc., but not that important for us right now. Moving on to that 10-year. There was a question also from Mike LaRusso, who I'm not sure if you're here, Mike, but you were asking about specific buy points on TLT, which I will address that today as well. So from the 10-year perspective, you know, we were down 1.18%. It really is, at least from this perspective of a trend moving up here and moving higher to the upside on the 10-year yield, you know, we kind of need to maintain this 4.4%. We're currently at 4.42. So I'll put a line right across the bottom, at least around that number. Here's 4.4%. For me, continuing this uptrend that we started back in early April, it's important that we stay above that line. Now, it's not saying that this trend will be over if we break it. It just would imply that there's a bit more weakness. There you are, Mike. Yeah, I'll talk about your... Well, let's just do it right now. Talk about steering the boat in a different direction. So Mike sent a question about TLT a couple days ago, and I'll be honest, I have so much going on in my head, I can't remember whether I answered it or not. And Mike's comment was, I'm interested in taking a large position in TLT. Is the zone 85.50 to 84.09 a good one, or is it better 78 to 79? Will a further cut in interest rates favor a rally? Okay, I'm going to start with more of where do I think things are going to go, right? If you go and look at the price chart of the 10-year yield. So here we see that it's been moving up, right? Remember, TLT is like 20-year plus, so it's longer-term bonds, but the 10 is a good representation of what's going to be going on with that yield. It's my belief, and again, this is not here to sell anybody on anything. We have to come up with our opinions, but I do believe that the rates are going to get higher. I believe that the 10-year is going to continue to drift up here, even though the Fed wants it lower. It's about supply and demand, and as more people kind of look at America negatively, they may no longer buy the 10-year bonds, the longer-term duration, because the dollar is, in fact, losing some of its power as the world reserve currency. So based off that, I would make my decision off of what's happening with the 10-year. I believe that the 10-year is going to continue to go higher from a yield perspective. Now, if the 10-year keeps going up, notice if I add TLT to this chart, let me see if I can add it on right here, it will be the exact opposite, or should be the exact opposite. So there you have TLT is the solid line, and the 10-year yield is the candlestick. So let's just kind of zoom in here. You can see how TLT has been drifting lower and lower and lower. That's because yields are getting higher and higher and higher. If my hypothesis is correct, is if the yield keeps going up on this, then you would not want to be a buyer of TLT because TLT will continue to drift lower. There's a pretty clear correlation. Notice back here in December of last year, the 10-year bond rallied significantly in yield, and look what happened to TLT. Big drop. So let me get the overlay out of here and look at TLT to look at the levels you mentioned. So here's your TLT. And you mentioned, let me get the numbers here, it was, I believe, 85.50 to 84.09. Okay, 85.50. I'll put a little line on there. I'll just to start the zone. 85.50. Come on. Coordinates 85 point. Okay, so there's your thoughts on the beginning of that demand zone. And I see why you did it, right? And again, you probably asked this a couple weeks ago, and I just haven't gotten to it, so my apologies, Mike. But you were probably basing it off of this area of consolidation and turning point that happened back in January of this year, right? That would be my guess as to why you chose that level, and we bounced off that one as well. Now, if we were here when you sent that email, I would probably have said, no, this is not a fresh level. It's been hit before. So it's not going to be a strong demand zone buy point at 85.50, and therefore I'd look for a lower level. However, personally, I wouldn't go for TLT regardless, because look at the price trend of TLT, and I know what many people think. They think, oh, it's going to be a buy opportunity at some point. Sure, it will, but it's going to be a buy point when yields stop rising. And right now, the horizon, in my opinion, looks like higher yields. Therefore, I'm not a buyer of TLT under any circumstance. I would actually be more inclined to be shorting TLT because 10 years is going to keep going up. That means TLT should be drifting lower and lower and lower. So, Mike, again, that is not financial advice, right? That's just me saying I believe that 10 years is going to keep rallying. If you want to buy TLT, then what you're saying is yields are going to drop. The long end of the yield curve, the 20, the 30, the 10, those are going to start to go lower. And if you're right, yes, TLT will rally. Remember, interest rates are the opposite, or yield rates are the opposite of what the underlying ETFs will do. So hopefully I answered that one for you. For me personally, no, not looking to buy TLT. And if you look longer term here, you might go back and say these levels way down here at 82. Let's make this a weekly so it looks a little bit better. You guys are funny today. It'll give you some chat powers, and all of a sudden you're really hilarious. Let's go and put this line down across like the lowest point we see here, going all the way back into 2003. That's right around that $80 mark. Does $80 become an attractive buy point because it hasn't been lower than this in 20 years or so? It doesn't mean that much to me. If the prevailing factor is going to be yields, and the writing on the wall, at least for me, says that yields are going to continue to move to the upside. Therefore, this will move down. So there you go, Mike. Hope I answered your question for you. My apologies for taking so long to get to it. It's just been scattered. It's funny, I watched some shows because you guys had recommended them. I watched a couple pieces of different segments. Thank you, Liz, for your one that you sent in. I'll talk about that today. These guys that do these shows, every one of them has a production team. I'm a one-man band. I'm the guy that's got the bass drum, the cymbals, the guitar, and everything, just all playing all at the same time. So, yeah, a little bit harder for me to get all these things and questions answered. It'd be nice if, turn this into a major production, have a video team would be great, but it's probably not going to happen. All right, let's continue on. So that was tying in Mike's comment about buying the TLT. And I tied that back to the 10-year, which I believe is going to be rallying and continuing to go higher. From this picture here, it looks like we're in this massive pennant formation that goes all the way back into 2023. So not a lot of big change happening there, but if that 10-year continues to rally and gets above this, that indicates bad things for the United States ahead. At least economic times are going to get tougher and tougher if we pop on this 10-year yield much higher. All right, back to the daily, and then keep on going. Thanks for Jim. You're here for the one-man band show. You know what? Sometimes I wish I had more a staff. Would be fun, but then it's much more serious. Then you have to be earning money to get these people paid to do the show. Otherwise, just a labor of love for me. All right, moving on. Bitcoin. Bitcoin's getting a little bit concerning. I actually anticipated it having a big rally this week because starting yesterday, Wednesday, Thursday, Friday, I think Saturday as well, there's the big Bitcoin conference in Las Vegas, which I would have loved to have gone to that show, but Didn't go. Obviously, I got too many commitments. And, those shows generally are just a bunch of, what do we say, orange-pilled fanatics that are all in on Bitcoin. Look, I'm not all in on Bitcoin. I'm very positive and bullish on Bitcoin, but, I'm not putting everything I have in crypto and digital assets. It's a portion of my portfolio. So for me, when you have an event like this, where you've got Peter Schiff and Cynthia Loomis and a lot of really prominent people in the crypto space, I would have anticipated Bitcoin having a bit more of a rally, especially when people like Jack Dorsey make announcements that they're taking Bitcoin for payments. You have announcements by 21, which is a new fund that's going to be building more Bitcoin positions and holding large Bitcoin positions with Jack Mallers and Tether. We're talking, hundreds of millions of dollars there. They are buying Bitcoin. They've already bought another 4,000. You would think that this would start to move to the upside here. So Andre says, was this a false breakout to all-time highs for Bitcoin? Well, I don't know if it was a false breakout, but right now it looks like a bull trap, right? It broke above and then popped back down to the downside. Now the question is, where do we go from here with that Bitcoin, right? If I draw a little box on here, like I love to do, the most logical next stop for Bitcoin is somewhere right around 104,000. So we got another $2,000 drop here in Bitcoin before it stair steps back to the upside. And I think that's probably what's going to happen, is it'll continue to drift lower here, and then the change will happen, and we'll see it pop back to the upside. So there we go. Margaret says, as a payment method, you mentioned which cryptos were much better. Why not adopt them as a new payment method? So it's a great question. When you look at the ecosystem of payments and cryptocurrency, Bitcoin focuses only on peer-to-peer payment. It does nothing else. So I think part of the reason you're not seeing a project like Solana in this discussion is Solana isn't as decentralized as Bitcoin. Neither is Ethereum. Ethereum is great, but it has all these developers and team members around the world. Bitcoin is just running code. It's just making sure the network is safe and just to send money back and forth. That's it. With something like Solana or Ethereum, you start to put more strain on the network, more vulnerability, the more open that network becomes. Meaning, anybody here can build an application to plug into Solana or Ethereum. Any one of you can do that right now and set it up. And maybe you do something malicious that could bog down that network or slow it down. It just creates like a vector point of possible failure in that system because of all these extra pieces being done. If people want a payment network, they want just the payment network. Now, in the future, as I mentioned out my $1 trillion idea for you guys the other day, could we be using Ethereum and Solana as payment networks? Absolutely. Bitcoin just has passed all the regulatory issues. We still don't have clarity on Solana or Ethereum or Cardano or Avalanche or Algorand. All of those cryptos are still questionable. We haven't got definitive information that those cryptocurrencies are now cleared by the regulators. You can now trade them safely and we can accept them as payment. We don't have any of that. All we know is Bitcoin has passed, right? So I think that's why Bitcoin should be getting the lion's share of the attention. It should be getting the biggest moves because it has really market approval. Ethereum still has not been cleared of, is it a security or a commodity? And until that's resolved, none of those payment systems will be massively adopted. If, let's say, for example, Solana is cleared as a commodity, well, then it opens the door to any financial institution to use it without any regulatory backlash. Bitcoin now has that as well. No regulatory backlash if you're accepting Bitcoin for payments. And what are we seeing? We're now seeing businesses open their door and say, hey, I'll take Bitcoin, sure. So yes, you're right. We should certainly have more choice with regards to payment networks, but Bitcoin is taking the lead because that's all it does. When you have all sorts of different applications and utility pieces, it can have an effect on the system. For example, Ethereum might be plugging along absolutely normal as, let's say, a payment network, and then comes along NFTs, right? Non-fungible tokens, and they became all the rage. So all of a sudden, the volume on Ethereum's network went from a few transactions per second to, let's say, 100 transactions per second. Well, the network can only handle 13 to 15. So all of a sudden, that network became extremely bogged down and incredibly slow. Fees spiked through the roof. So if these networks get tremendous demand, it could really slow them down, bog them down. And in some cases like Solana's network actually froze. Remember, blockchains charge a fee for a purpose. If you have a blockchain like Ethereum, and Ethereum charges transaction fees, they call it gas, right? It's the gas is the fee to use the network, to access this decentralized network. The reason for the fee and the reason it goes up as more transactions come in is it's designed to protect the network. For example, if you guys wanted to, anybody here could go and send 100,000 transactions for Solana in 1 second, right? And you pay the fee to do that. It's super cheap on Solana. But you do 100,000 transactions per second, you're going to bottleneck the network. And people in the past have spammed the network cheaply because transactions are cheap, and the network crashed. The entire network went down, and anything plugging into Solana was down. No business. Now, have we had issues like that with Ethereum? Absolutely. I think I mentioned I was teaching a crypto class at Trading Academy, and we were in a virtual metaverse game called Decentraland, and I was showing them how it worked. And I went to swap out some Ethereum for 100 of these Mana tokens. Mana is the currency used in the game. The transaction fee was $20,000 because the network was so bogged down. So it was a long-winded answer to your question, Margaret, but Bitcoin, because it focuses on only being a record-keeping ledger, is safer because it doesn't have all these other programs and demand on that network. Now, you mentioned here, I said, you said it was slow. Yes, it only handles about 7 transactions per second. However, there's layer 2s. These are networks that are built on top of Ethereum, which can do 50, 100,000 transactions per second. So they'll use Bitcoin as the transaction layer and just do your executions up top and report it back down to Bitcoin. That's how you scale networks. So Ethereum has a bunch of different layer 2s, so does Bitcoin, to make it faster and more acceptable as a currency system. We're totally off tangent on that one. Steve says, ETH looks like it was going to die last few weeks. Been a crazy run up. Yeah, there's a lot of chatter about Ethereum and what it's doing to make itself better, I would say. Oops, that's not what I wanted. If you look at all of them, if we run them by side, so here's your Ethereum chart. Let's look at something that's in the same kind of ballpark. So there's Ethereum. We can look at Solana. Right? They all have a similar pattern. They were certainly on a very nice rally recently. You could do near protocol as well, which is not as extreme of a move up. Let's go look at what else is on here. How about Algorand or Cardano? So here is Cardano, right? Cardano, similar picture, right? Big sell-off, and now it's rallying. And that's because all of crypto is having that similar look. Now, with Ethereum, part of the challenge for Ethereum has been upgrading. And so you have to get the community and the developers all to agree to do these upgrades. And some of them are so significant that they have to test and test and test to make sure that when they make these upgrades, the whole system doesn't come crashing down. In my opinion, it's a slow process, and that's what's hurting them. The chart looks absolutely fantastic. Ethereum still is the largest juggernaut out there in the marketplace. And if they make the right changes, they could be back up here at all-time highs. But projects like Solana are just faster. And right now, people are focusing on speed, efficiency, transactions. I want more throughput. And if this does become a globally adopted phenomenon, then most likely you will see something like Solana adopted, or Sui, which does 100,000, or Aptos, which does 165,000, or Internet Computer, which does 365,000 transactions per second. It's just too much. Jim says, it seems like crypto is waiting to see what sort of government adoption will be in place. Not necessarily adoption. I would say it's more about just what rules will be put in place. You're kind of out there in the Wild West. Okay, it's like, imagine walking down the Wild West and you got your guns and you got your whip in your belt and you got spurs in your horse and everything, and there's no rules on it, but rules are coming. Well, you want to kind of put your guns away because you're sure that could be a problem. Right now, a lot of these projects are trying to fix their problems of being decentralized and having a development team so that when the regulations do come, that they'll most likely pass it. In the U.S., I don't think it'll happen this year. I think it'll probably be next year. We'll get much more clarity on what's a security, and that will ultimately kick out a lot of cryptocurrencies out of the United States. Margaret, that's a good sign as well. So Margaret says, and there's Ethereum ETFs. Yes, there's Ethereum ETFs. There is Bitcoin ETFs. There is works for Ripple and Solana ETFs as well. So there's going to be more and more ETFs. That should be a positive sign for those assets. I consider them assets because they go up and down in value. But the future's a strange one. Who knows what's all going to entail? I, for one, have my largest holding is Bitcoin because, as I pointed out, it has regulatory clarity, and you can see its dominance here. There's actually a Bitcoin dominance chart. If you type in BTC.D in TradingView, this will show you what percentage of all of the crypto market is Bitcoin. So right now, you can see there was a big drop down here a couple weeks ago, but right now, Bitcoin is roughly 63% of the total market cap of all crypto. And notice what's been happening over the past, really since 2023. Bitcoin has surged. Altcoins, all these new ones, were doing really well back here in 2021, 2022, but people realize that most of those are garbage, and they're rotating back into Bitcoin. And I think that what you're seeing here on this chart really reflects not only that people are moving away from these alternative coins, but just that this is adoption. This is what adoption looks like. And until we get other rules in place that say, okay, Ethereum is fine in the eyes of the government and you can use it everywhere, this chart will probably continue to look like this. Now, as soon as you get like Ethereum, I'm going to say white labeled, meaning Ethereum can now be used everywhere, then Bitcoin will lose part of its dominance because more money will flow into those ones. And I do think that that's coming, but it'll probably be next year. Kind of funny to me, it seems like the more government gets involved, the more likely this whole thing falls apart, more corruption, etc. I agree with you on that. Part of me loved the principle of cryptocurrency and digital assets because it's a middle finger to the government. It's like saying, you guys screwed up the banking system, you screwed up all these different things. We just want to be in charge of our own money, right? And that's ultimately what Bitcoin is saying, you are your own bank, you're in charge of your own money. Now, if the government gets involved with it and buys Bitcoin, I don't think that necessarily ruins Bitcoin. To me, it's the global adoption that'll be the ultimate driver here. Do you see Germany's U.S. tech tariff proposed? I did not see that, Sava. I did not. Here goes the crazy war back and forth. Our bipolar markets. I just talked about it today. Lee says, met someone the other day who bought Doge based on someone telling him to invest in it. He doesn't have any other investments. He manages himself. You bought Dogecoin? I mean, the Dogecoin is garbage. It doesn't really have many real world applications. Not a lot of people use it. It's 20 cents. It'll go to $1. It might. But I'm looking at when I build my portfolio of crypto, and what we talk about in the crypto program is really, if you look at this list of cryptos, some of these are really good, some of them are really bad, right? And I need to find out which one's which, and at least do my analysis so I'm not going to get caught holding bad things. Now, one last little piece here before I move off of crypto, I don't want to make this all a crypto show, is we talked about the fractional reserve banking, and Liz yesterday was on with Coin Bureau, they're great. Those guys really do a good job of talking digital assets and cryptocurrency markets. And she asked me a very specific question about fractional reserve going on with Bitcoin. And they did not answer that question, by the way. They said, how is Michael Saylor buying these things? And they answered that one, and they're correct. Michael Saylor is absolutely using a VWAP, or TWAP, time weighted average price. So basically, if they want to buy 5,000 Bitcoin, they're not going to buy it all at once. We all know that. They'll be stupid. They say, okay, we want to buy 5,000 Bitcoin over the next 3 days. That means every minute we buy, 1 Bitcoin, or whatever the number calculates out to be. But in trading platforms, they call it a slicer, where you put in your order to buy 1 million shares, but you say slice it into even pieces over the next specific amount of hours. Now, here's why I have such an issue with this answer that they gave. Everybody says over and over, oh, it's the OTC markets. Oh, it's the OTC markets. It's the over-the-counter markets. Not one person in this room, not me, not anybody that I've talked to knows exactly what goes on with those OTC markets. It's this bizarre little world that everyone just says, oh, well, yeah, it's the OTC market. BS. They don't tell you what happens there. And I want everyone to put yourself in the shoes of, you're a large whale and you've got a lot of Bitcoin. If you have a lot of Bitcoin and you know that Michael Saylor is buying billions and will continue to buy Bitcoin, and you know that the U.S. government is going to be buying a lot of Bitcoin down the road, and you know that 21 Capital is buying Bitcoin, and GameStop is now buying, and we're getting corporate adoption, and we have a strategic Bitcoin reserve, why the hell are you selling if someone comes to you right now? There's no way that they're going to sell at current market. I can guarantee you, if you came to me right now and said, Merlin, I want to buy your Bitcoin, I'd look at this market chart over here. I'd go out to this chart, and say, okay, right now it's trading 106. If you want to buy all my Bitcoin right now, I will happily sell it to anyone in this room for $120,000 per Bitcoin. And as soon as I get my $120,000 per Bitcoin, I'm going to buy more at a cheaper price. Because anyone who's a whale right now and holding Bitcoin has been holding for a while for a reason, and it's waiting for adoption. There's no way that these guys are buying that much without any market impact. It's just common sense and math on the way the markets work. So they danced around that issue, right? Liz, you said, right, they answered a different question. They circumvented that one real quick because I don't think anyone really knows either about fractional reserve lending. Damiani says, I saw Saylor say it's stupid for him to show proof of reserves. Look, let's be honest, it's really stupid for anyone to show their personal wallet, period, right? I'm not going to show you guys my personal. If you're in my crypto program, you actually do get to see my some of my wallets because I'm fairly transparent there. But if I was to show balances and say how much crypto I had, it is possible that someone watching the show or hears about me and my crypto holdings holds me up at gunpoint and says they'll kill me if I don't give them my crypto. Now, they'd be foolish to do that with me because there's no way I could do that. There's just too many steps to do it at one time. I'd have to go literally into places that wouldn't work. I couldn't get in there with a gun to my head. That's for damn sure. So, yeah, it is foolish for him to put out his address from that respect. However, he has multi-signature wallets, meaning multiple people have to give their private keys to access it. So no one person could unlock it, even if he was held at gunpoint. And that's the point he's trying to make. If you listen to Jack Mallers, so Jack Mallers is a guy he's one of the biggest Bitcoin fans out there. He is now the CEO of 21 Capital, who is another MicroStrategy type business, and they've got billions of dollars from SoftBank and other firms to buy Bitcoin. Jack Mallers says, here's our wallets. If you're investing in my 21 Capital Fund, I want you to see and verify and trust that we have the Bitcoin that we say. This could actually get a lot of really good publicity for him. I've actually reached out to him. I'm trying to get him on the show. I doubt he will, but I'd love to talk to him about it because this is the ultimate business, right? None of us here, well, I mean, I could do a poll. Maybe one of you might, but I'm going to go out on a limb and say that nobody here trusts that the government has all the gold they say at Fort Knox. Nobody here trusts Michael Saylor that he has that 580,000 Bitcoin. We have to trust because that's all we have. I don't believe that Michael Saylor has all those Bitcoin. I don't believe that it's all held in one wallet. I think it's held in other customers' wallets. Again, fractional reserve lending. So when you could point to a wallet, like if Binance came to us and said, one second, I've shown you guys this all the time, but if Binance came to us and said, hey, we have, gosh darn it, one second. Talking and typing is really difficult to do. Largest, okay. Oh my goodness, this is really, here we go. If Binance came and said, published and said, look, we've got 248,000 Bitcoin in their financial statements, I still wouldn't trust them. But if they said, here's our address, you can look and see we've got 248,000 Bitcoin right there, and our name is on the wallet, I believe it, because this address cannot be faked. I can't click on this and it be a fake address. This is referencing the blockchain for Bitcoin. There will be no fake addresses out there. So to me, this is the way to prove to people you actually own it. And I'm really interested in what Jack Mallers is doing with 21 Capital. I may be a buyer of that. I want to see more about it, but they're going to publish their addresses. Here they are. We say we've got 50,000 Bitcoin. There it is. You can see it. Until I have that, I don't trust Michael Saylor. I don't trust the U.S. government. I don't trust anybody until you can point at that wallet and say, that's mine. And I can see your transactions. That, to me, is where it would all be. Liz says, Nick seems to think my question was driven by Saylor's interview with Vegas. No. I thought you'd throw me out there. Say, Trader Merlin has said there's fractional reserve banking going on. You should talk to him about it. It would be a nice little plug, Liz. Next time, throw me in there, huh? Because, let's be honest, Liz, where did you hear about the fractional reserve banking of Bitcoin? Right? Here. I don't think anybody's thought that. I'm kind of like, I feel like I'm pushing that issue because it's what happens with cash systems and money, and now Bitcoin is being treated as money, and therefore I do believe we have fractional reserve. Oh no, fractional reserve banking going on here for us. So hopefully it's not spinning. So, yeah, next time you're on there, Liz, it was nice that they quoted you and brought you up. Just say, hey, fractional reserve banking, meaning that Fidelity and Coinbase, who are the big custodians for Michael Saylor, don't actually have all that crypto. I don't believe. Anyway, we're moving on. Liz says they arrested people in New York City for kidnapping a guy and torturing him to get his passwords to his Bitcoin. They did the same thing with a guy in Vegas as well, right? So, you want to be careful with it and have systems in place to, protect your Bitcoin as well. All right. Yeah, now I'm getting a spinning issue here. Merlin's crypto is more secure than... Good. From here, but I'm typing left-handed as I'm still... No worries. All right, let's go back to our charts here and keep on moving up. I want to talk about a couple other topics, and I got to make sure I get through all this stuff. How much time we got left? All right. You get me going down that rabbit hole of crypto if you see what happens. This is what happens. All right. Let's go up our list. I was moving up that list here. Obviously, we already talked about the Bitcoin price chart, which does not look great. The dollar index. So the dollar index started off great today. Remember all that good news about trade tariffs being over? The dollar was surging last night. Oh, man, it was just boom, way up. And all of a sudden, a gigantic red candle as soon as the appeals court said, no, you can do your tariff stuff. So we're going to have this long fight, this bipolar fight of tariff and no tariff back on. It just means more uncertainty. I was really hoping it'd be resolved so we could get some trend, right? A nice solid trend would be fantastic, but right now, no. So this falls in line with what I've been expecting, that dollar index getting lower, going back down towards that yellow box at the bottom between $97.60 and $98. Moving on up, NASDAQ. Barely changed. This is where I think things are going to get kind of fun. And the reason I say fun is you notice that NASDAQ hit its head multiple times. We broke above it last night after hours with NVIDIA's earnings, and then we ended with a big shooting star. And you could add to that a little bit higher volume. So not climactic volume, but you have a shooting star on the NASDAQ, which does kind of hint at a selling off day tomorrow, a downside day for the NASDAQ. It was only up 0.13%, and at one point we were up much more than that. We were up almost 2%, I believe. Let me get the exact number there. Boom to boom. At one point last night, we were up 2.24% before giving it all back. Same thing with the Russell. So the Russell 2000 shot up into that area of supply, just barely tiptoed above it, and now came crashing back down, and you have a shooting star on the Russell. And guess what you have with the S&P 500? Well, it broke 6,000. 6,000 has been this line of a whole number psychology that it has not been able to break through since March of this year. We tiptoed above that. The intraday high was 6,008. So we went 8 points above that line before screaming back down. Ultimately, the S&P was up on the day, but not where it was. I mean, we were at one point on the S&P up 1.78%, and at the end of the day, we're only up 0.34. So giving back a lot of the grounds, and it is what? A shooting star. So this leads me to believe that tomorrow will be a down day, a bearish day. And of course, when that tariffs talk came back in, money flowed back into gold, which bounced off that 3270 mark, which was kind of holding here from this low from just a couple days ago. So all in all, it looks to me like Friday will be a bit of a bearish day. I'll be bummed with that. I have a bunch of positions that I'm hoping stay right where they're at. I've actually liked this kind of oscillation and not much movement. You guys know I still have MicroStrategy. I've got IBIT. I've got United Health. I've got SMCI. I have a leveraged long semiconductor play too, but all kinds of stuff in my portfolio. We'll see. But the shooting stars are the ones I think you want to pay attention to for tomorrow on S&P, NASDAQ, and Russell. Should be pretty fun. All right, let's see what you guys said here. Fractional banking reserve sounds appealing to private bank. Any bank, any lender, fractional reserve banking is great because you can now lend out and earn interest on assets that your customers deposit. And the more customers that want to borrow from you, great. As long as people don't sell those assets that you're holding and using as collateral, you're fine. So if people keep holding their Bitcoin, Michael Saylor's holding his Bitcoin there, they'll just keep doing fractional reserve lending there. And, I could take, let's say Michael Saylor buys 1,000 Bitcoin. So he buys 1,000 Bitcoin, and then Oliver wants to buy 100. As the exchange, I don't necessarily have to go to the market and drive price up. I can just say, all right, Oliver, I'll sell you 100. Here you go. And Oliver doesn't know the difference whether you get executed on the open market or from an institutional dealer, an over-the-counter market, or was Coinbase just giving him a ledger entry. And that's what I believe is happening is It's a ledger entry. They're simply just saying, here you go. You now have 100 Bitcoin in your account, Oliver, and nothing actually happened. So my assumption is that Coinbase and Fidelity are on the hook for a lot more Bitcoin than they have in their hands because they've done fractional reserve lending out to their customers. So let's say Coinbase's balance sheet says they've got 100,000 Bitcoin. They might have 200,000 or 300,000 in customer accounts. So as long as people don't do a run on the bank, none of this will be a problem. If people start selling their Bitcoin, and again, this might time perfectly with what's going on in November, which is the beginning of that 4-year cycle where everything crashes. If people are going to do what I'm going to do, which is sell my Bitcoin in November, or September, October, somewhere in there, that puts a lot of selling pressure on the open market, and that could potentially pull that tide down low enough that all of a sudden Fidelity and Coinbase have to scramble to get Bitcoin. We'll see. Let's see what do you got here. You might want to get a signed UNH for real. Just saying, not financial. I'm already assigned, JD. I'm already assigned. So I'm assigned at 300, and I've got the 305 calls expiring Friday. I'll probably sell weekly calls just above current price. I'm fine with it. I'm not overly concerned at 300. Hey, Big Ab, good to see you. No worries. You just missed it, Big Ab. I just gave the secret formula on how to turn $1 bill into $1 million in 30 days. So, and I'm not going to record the show today, so you can't see it. Sorry, Big Ab. We'll have to exchange that advice over a beer sometime that I owe you. They should have to report fractional reserve lending by security. I agree, Margaret. Again, who's regulating Coinbase? Is FINRA overlooking all the actions that go on at Coinbase? Is the SEC? Is it the OCC? Well, which business is making sure that they actually have the assets that they have? Remember, the Federal Reserve is what tells the banks what they need to have. Typically the reserve requirement is 5 to 10%. Well, that means if someone deposits 1,000 Bitcoin, let's say it's a 10% reserve requirement. If someone deposits 1,000 Bitcoin, I can lend out 900. And that person deposits those 900 Bitcoin, I can now lend out 810. So that $1,000 deposit, if I have a reserve requirement, could turn into thousands of Bitcoin. But I don't know who's looking at this and watching it in oversight. Like I say, I have a feeling this will be a much bigger discussion and topic down the road. It's crypto and old people analyzing a needle in a haystack. Yeah, it's just new. We just need to have our regulators understand it better. 88. Oh, I'm definitely not golfing with you, big guy. Jeez Louise. All right, so I went through our top 8 markets. Let's go back to the questions from yesterday, which I wanted to not sound so stupid, and I don't like when I don't know things, so I'm glad you guys asked because it forced me to dig into it. So with regards to options, there were 2 questions that came up yesterday. One was, can you trade options after hours? And my belief was, yes, that you could do it on futures. You can actually do it on 3 different instruments. So, and this is based off of the CBOE. That's the SPX, XSP, and the VIX. Those have extended trading. And the reason they don't do them 24 is because an option needs to have an NBBO. It's based off the national best bid and offer. And during aftermarket trades, that doesn't happen, right? You don't really have an NBBO because it gets really wide. Now, some of them, correct, can go to about 15 minutes after market, correct. Some brokers allow after-hours options trading and some don't. So Charles Schwab does, E-Trade does, and some of these other ones, but it's brief. Now, the other part you guys brought up was 24-hour trading 5 days a week on Robinhood, to which I balked and said no. The official ruling for extended hours trading, as we looked at, you can see on the price charts when it is, there is 24-hour, 5-day-a-week trading, but it's outside of a regular market. It uses something called BOATS. BOATS is this company right here. BOATS stands for Blue Ocean Technologies, and all they are is it's like you guys know what a dark pool is, right? A dark pool are these areas, these exchanges or marketplaces where people buy and sell anonymously. So I could go there and buy anonymously and no one knows it came from Goldman Sachs or Merlin Rothfeld. It's dark. This is like a light pool where the orders are aggregated. And I mentioned yesterday, somewhat incorrectly, that you're probably trading against Robinhood's customers. And that is actually partially true. What Blue Ocean does is they take liquidity from Robinhood and other companies and create a marketplace that you can trade on after hours, 24 hours, 5 days a week. I'm going to tell you right now, you should stay away from this. There are all kinds of circuits and limitations here so that it doesn't have these major market crashes, but you can technically trade 24 hours a day, 5 days a week, and they outsource to this company called Blue Ocean Technologies. My assumption would be that Robinhood actually has a stake in them and owns a little part of it. But because you can see who's buying and selling Sava, I believe that would not make it a dark pool, but it would operate the same way, right? You could go say, I want to buy or sell X security, and they would show you, okay, here you go. Here's how much you can buy at these prices. I can guarantee you the liquidity is extremely low. I haven't had time today, but I wanted to actually dig in to see how transparent those liquidity pools are, and is there the possibility for me to go in there and watch them like a level 2 screen, and I'll take screenshots for you, and you will probably just go, oh my gosh, why would anybody ever touch this thing based off these liquidity pools? It's going to be very, very low. Dangerous stuff. But can you trade 24 hours? The answer is yes. Should you? Absolutely not. Now, let's say you're out golfing, right? So Big Eb's down there in the course in San Diego, and he just drills his driver, and it's just soaring. He looks in the sky, and he sees a I don't want to use these examples; they're just terrible. But let's say he sees, United Airplane crash, and let's say it's outside of regular market hour. He's night golfing, right? Could you use 24-hour trading there and go out there and short United immediately? Yes, absolutely. But I would say that's a very one-off, extreme situation that most people probably wouldn't be a part of. I think, was Southwest Airlines had the door blow off, right? Was that Southwest? I think they had the door blow off their plane. If you're sitting there on the plane and door blows off, I'm shorting that company because as soon as that hits the news, people are freaking out, the stock's going to tank. So you certainly could use these 24-hour pools to make trades, but it would have to be, Alaska Airlines. You'd have to just be very, very careful. Limit orders for sure. Never use a market order, and certainly don't trade big share size. There's not going to be the liquidity. It's not possible for there to be that much liquidity at the wee hours of the morning when all the major players are not there, right? There's no responsibility on the part of any market maker to be in this Blue Ocean liquidity pool at 3 in the morning. They don't need to be there. Last part, I'll wrap up, was going back to economic data, or I suppose exiting a limit too. Yeah, correct, Chad. You can certainly exit with a limit. Aren't we already close to a T0, 24.5? Yeah, depending on which account type you're using and which broker you're using, we're pretty much T0 now. T meaning once you make the transaction, how long is the settlement? So T0 means your money's instantly available, which it should all be. All these systems are electronic now. When I got started, it was T3. Most retirement accounts are still, I believe, T2, which means if you close out something in an IRA, you have to wait 2 days. But that has been shrinking and shrinking. Pretty soon it'll all be T0 as Sava puts out there. Yep. Let's short Boeing after hours now. You could. Just be careful. Let's talk real briefly about the GDP number that came out today. Actually, it was better than expected. So we know that the previous reading was negative 0.3. And the way this works, guys, is there's a 3-month window. There's the advance, which is the first reading. A month later, they adjust it, make changes, call that the preliminary. And a month later, they do the final, and then it starts all over again. So this is the second reading. This is the preliminary, and it's already looking better. It was negative 0.3, and they expected it to stay the same. It actually came out at negative 0.2, which is better. It's showing incremental, getting closer to zero, meaning no GDP. What we don't want to see, well, I guess it really depends on who you are, but obviously I want America to prosper. But what you don't really want to see is when we get to the final, that number's negative. Because if we get a negative number for final GDP, then it starts the clock ticking on, are we in a recession? Remember, two consecutive quarters of negative GDP would be one of your hallmarks for a recessionary period, which a lot of people are forecasting. And I'll tell you, there's just so much information going on, I couldn't tell you whether I'm optimistic of a recession or pessimistic on it. I can make arguments for both, so I'm just trying to be a little bit more flexible in my trading because it's easy to get sidetracked with all the data and everybody's input. So there's a lot of factors driving that GDP number for the U.S., but it just looked a little bit better today than it did in the previous month reading. So that's obviously a very good sign. Now, for tomorrow, let's talk about economic announcements first, and then I'll go into your earnings. Tomorrow's a big day. Jerome Powell is very adamant that core PCE price index is the main reading that he's using for inflation. And what's happened over the past couple months has been, I don't want to say manipulated, but it could be skewed data because of how quickly these tariff talks were on and off, and just the shock factor created ripples that were anomalies. Well, here is the core PCE price index numbers coming out tomorrow morning at 8:30 a.m. Eastern Time. Here's what it looks like. We had that really big pop up in March, and then the last reading in April came screaming back down and was at zero. So everyone's like, oh, wait a minute. We've got no inflation? Well, we'll see. Your reading that comes out tomorrow, they're expecting it to be 0.1%. So a slight step up, just like they expected last time. So here we go on this next reading of it. My gut tells me it's going to be higher than 0.1, but who knows? I don't know how they calculate the data. ISM Monday, you've got a lot of stuff next week too. Next week is actually a really big week because, remember, the dual mandate of the Fed is full employment and stable pricing. Tomorrow with the core PCE price index numbers, that's your indication of stable pricing, right? And if we stay at 0.1, awesome. If we get 0.2, markets won't like it, but that's still a good number. Annualized at 0.2 is 2.4%, which is what the Fed wants. We're good. But next Friday is the second element of the Federal Reserve's mandate, which is unemployment. So the unemployment rate comes out next Friday. Of course, that's a long ways away. We'll talk about that. Trump says there will be no inflation, and he knows inflation better than anybody. It's going to be huge. Bigly knowledgeable on inflation. But obviously, the number tomorrow is critical because if they can prove for let's say 3 or 4 months that inflation is at zero, no increase in inflation, then that does give the opportunity to Jerome Powell to say, okay, 25 basis point cut. If inflation's rising, then he's not going to cut. He's going to hold it, and if it keeps rising, at some point he'll raise. So it's really this waiting game. For me, it's not the unemployment number that is critical. It's tomorrow's core PCE price index number. So keep an eye on that one. The trajectory we had before our April reading was, I thought we'd be at 0.8 by July, right up here somewhere. Well, all of a sudden we got that big smack down here back to zero, which is great for anybody wanting rate cuts. You'd like to see a couple more months of this, and then Jerome Powell may actually cut rates. All right. And as far as earnings go, I don't remember there being anything that's important for tomorrow, but let me just bring it up here. I didn't have it ready for you guys. Dun, 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 dun. Tomorrow's going to be an exciting day. I got quite a few positions that are right at the current strike. So here's your earnings for Friday. There's nothing. Typically, Friday is a lot of international stuff. No, that's the... There we go. So 30th, last trading day of the month. Woohoo! You got Canopy Growth. We want to talk about weed stocks, but look, it's only got a $313 million market cap, so this is just almost irrelevant. None of these big ones here are U.S. companies. Now, granted, they still trade on U.S. exchanges as ADRs or something like that, but there's nothing big for the U.S. market tomorrow. Shoe Carnival, yay, here we go. All right, let's see, last minute questions. I bet he's not going to raise once unless unemployment spikes. I agree. If inflation stays the same and unemployment starts to move up, he's going to hold. The prudent thing to do for Jerome Powell and the Fed is hold. Just, our markets look okay, right? No one is freaking out that unemployment's skyrocketing or inflation's through the roof or our economy is horrible. We look okay. Jitty, do fundamentals reflect technicals or technicals reflect fundamentals? No, they do not. Fundamentals simply represent the performance of the company. Now, typically, you could make the argument that the technicals are leading fundamentals. That people are looking at the fundamentals, looking at trends on the balance sheets and earning statements and cash flow and all that stuff, and buying according to the trends on the fundamentals. So I would argue that technical analysis is a leading indicator to the fundamentals. Hold and blame Trump. Now, Jerome Powell didn't really blame anybody. Jerome Powell just says, I'm not concerned with who's the president or anything. I just got my job to do, and I'm getting a greater respect for Jerome Powell, honestly, the way he's handled the attacks on him from everyone, really kind of going after him. All right, everyone, that's going to do it for me for today. It is Thursday. Tomorrow is Friday. I'm really looking forward to the Friday show. I should have a lot to talk about. You guys know my strikes here, UNH. So UNH, I've got the 305 calls, and we're currently at 297. So hopefully I'll get to keep my United Health and sell some calls higher up. I've got SMCI. I have the $42 calls against that one. We're down at 40.90 right now, so I'll probably continue to hold on my SMCI, and then I got MSTR. I had the 380 calls against my position, and we're at 370. So if it is a down day tomorrow, as the indexes are alluding to, then I should maintain all my positions and just sell some covered calls by the end of day tomorrow. If we get a nice rally, some of this will get taken away from me. And either way, I'm okay with it. For tomorrow, I'll paste after the show. Okay. All right. Oh, yeah, SEC, you knew that was going to happen. You knew the SEC was going to drop that loss. SEC is cleaning their plate of all lawsuits on crypto, in my opinion. And then they're going to start back up. We'll see how that goes. All right, everybody, that's going to do it for me for today. Hope you enjoyed today's show. Hope I didn't offend anybody by having the Bipolar Markets comment. Also, if you are going to be in Las Vegas July 15th, I will be giving a presentation on Tuesday, 10:30 to 12:30. It's all going to be about crypto. If you do go to the Money Show website to check that out, just type in the code. The code is 065234. I think it gets you a discount. I don't know. Anyway, hope you guys have a fantastic remainder of your day, and I will see you all tomorrow. Take care. And if you have questions, comments, email me. These shows are driven by your feedback and your questions. So talk to you tomorrow.